There's a number that doesn't get talked about at dinner tables. Doesn't show up in campaign ads the way it should, but it's there, growing, quiet, predictable. $1.78 trillion. That's how much student loan debt exists in America right now. Not corporate debt, not credit cards, student loans. The kind you signed for at 18 because someone told you it was the only way forward. And here's the thing, almost none of it is getting paid back. Let's start with what actually happens when you borrow money for college. You're 17, maybe 18. You've been told your entire life that college is non-negotiable, that without a degree, you're choosing a life of struggle. So you apply, you get in, and then the letter arrives with a number that makes your parents go quiet. $30,000 a year, 40, 50, but there's a solution right there in the envelope. Federal loans, private loans, all of it available at the stroke of a pen. You don't need a credit check, you don't need collateral, you don't even need to prove you'll be able to pay it back, because the debt isn't designed like normal debt. It doesn't care if you default, it doesn't care if you declare bankruptcy. In fact, student loans are one of the only types of debt in America that survive bankruptcy. You can walk away from a mortgage, you can discharge credit card debt, but student loans, they follow you, garnish your wages, take your tax refunds. They don't expire when you do. The system isn't built on the expectation that you'll pay it off. It's built on the guarantee that you'll try. So how did we get here? Rewind to 1965. The federal government starts subsidizing student loans under a simple idea. Education is a public good. If we make college affordable, we build a more educated workforce. Everyone wins. And for a while, it worked. Tuition was low, loans were small. You could work part-time and graduate without debt. But then something shifted. In the 1980s, states started cutting funding to public universities. Schools had to make up the difference, so they raised tuition and raised it again and again. Between 1980 and 2020, the cost of college increased by over 1,200%. 1,200. Inflation during that same period? 260%. But here's where it gets strange. The more expensive college became, the easier it was to borrow. The government kept expanding loan programs, private lenders jumped in, and schools? They had no reason to lower prices. Why would they? Students kept showing up, loans kept flowing. It became a feedback loop. Tuition goes up, borrowing goes up, tuition goes up again. No one asked the question that mattered. What happens when an entire generation graduates with debt they can't afford? Let's do the math on a typical borrower. You take out $40,000 in federal loans, standard repayment plan, 10 years. Your monthly payment? Around $450. That doesn't sound impossible until you remember that the median starting salary for a college grad is about $55,000. After taxes, that's maybe $3,000 a month. Rent, food, insurance, car payment. Suddenly, that $450 is the difference between saving and surviving. So you defer, or you switch to income-driven repayment. Your monthly payment drops, manageable now. But the interest, it keeps accruing, compounding. You're paying every month for years, and somehow the balance isn't shrinking. In some cases, it's growing. There are borrowers who've paid for 15 years and owe more now than the day they graduated. This isn't irresponsibility, this is math. And the math was never designed to let you win. Meanwhile, the narrative hasn't changed. Politicians still say college is the path to the middle class. Guidance counselors still push it. Parents still believe it. But the ROI has collapsed. A degree used to be a golden ticket. Now it's table stakes. Everyone has one, which means employers can demand it and pay you like they're doing you a favor. You're not buying opportunity anymore. You're buying permission to compete. And the kicker? The jobs that actually pay well, engineering, computer science, finance, those were always going to pay well. The degree just becomes an expensive formality for everyone else. The liberal arts majors, the social science grads, the people who were told to follow their passion. The debt becomes an anchor. You can't buy a house, can't start a business, can't take a risk on the job you actually want because you need the paycheck to cover loans. An entire generation financially hamstrung before they turn 30. Here's what's not being said enough. This isn't just a personal crisis,
It's a systemic one. Americans now owe more in student loans than they do in credit card debt or auto loans. It's the second largest category of consumer debt in the country, behind only mortgages, and it's slowing everything down. Millennials and Gen Z are buying homes later, having kids later, starting businesses at lower rates than previous generations because they can't. The debt eats the margin where risk used to live. Some economists argue it's dragging down GDP growth, that we're watching an entire generation's consumer spending get siphoned into loan payments instead of the economy. Others say it's a ticking bomb, that if enough borrowers stop paying, or if the government is forced into mass forgiveness, the financial shock could ripple in ways we're not prepared for. So where does that leave us? With a system that keeps spinning. Schools keep charging, lenders keep lending, students keep borrowing, because the alternative, admitting that we've built an economy that requires young people to mortgage their future just to enter the workforce, that's a conversation no one in power really wants to have. The debt grows, the payments continue. And the question nobody's answering is simple. What happens when an entire generation realizes the dream they borrowed for wasn't real?